I hope you're all doing well. I'd like to give a brief presentation on the markets since quarterly reports will be going out very soon. And I'd like to give you a little bit of perspective on what's been going on. So in front of me is a chart, in front of you is a chart of the S&P 500 from January 1 to March 31. So you could see the S&P peaked on February 18 and proceeded to go down with a few bumps, bottoming on March 23rd. And then on March 27, when the CARES Act was signed into law, markets started to recover, but still ended down 20%. Now, the S&P 500 are the largest companies in the US. I'm going to layer on a chart of the smallest companies in the US, which followed a similar trajectory through March 31, except they got hit a lot harder and are down about 31%. Smaller companies have a much harder time in economic downturns because they don't have the financial strength that big companies do. So investors have been dumping those stocks. Next, I'm going to layer on the MSCI EFA, which represents international companies. It's the red line following a very similar trajectory, down 23% to the US large cap 20%. Emerging markets, the green line, same trajectory, down similarly to the bigger international stocks. And then the bonds, switching gears to bonds adding that stability that we all want so much right now, up about 2.67%. So in a diversified portfolio, you're not going to hit the high or the low. You're going to be somewhere in the middle. And what I'm finding is most portfolios are down about 14 to 16% on the first quarter. And you will find that too. Next, I want to show you what's happened since March 31, because thankfully there's been somewhat of a recovery. So this chart shows January 1 through today. And this is the S&P 500 again. It's down about 11% now. So it's recovered 9 percentage points. In a diversified portfolio, US large companies are always the biggest allocation because they are the safest allocation. So you will all benefit from that. Russell 2000, which represents the small companies, unfortunately has not recovered, just a couple percentage points. Still a lot of pressure on the smaller companies. Same with international, up a couple of percentage points since March 31 to 22%. Emerging markets, same thing, recovered a little bit. And then bonds have done even better, adding more stability to portfolios at 4.33. So by today, most of your portfolios are probably down somewhere in the range of 8 to 10%. So that's as of today. You can see these charts and all the volatility. The question is, what's going to happen going forward? Nobody knows, unfortunately. The good news today was that some of the drugs that are coming out may be working to help the symptoms. So whenever there's hope about a medicine or work on a vaccine or whatever, the stock market jumps. The stock market is very sensitive to headline news right now. And so it's hard to predict when we're going to see a sustainable recovery or if the volatility is going to come back and maybe even hit these lows again. So I just want you to keep that in mind. In this time of uncertainty, we cannot predict what the market's going to do. Of course, over longer periods, I know most of you know this, stock markets recover. This is going back before 2012, and you can see that if you straight line this, you'd still have gains. And so it pays to be patient and not to panic during times like this. If you have any questions that you would like to ask me about this, please do. And I hope you have a great weekend. Bye-bye.